Ashraf Laidi of CMC Markets joins us now to talk foreign exchange. He joins us from his London office today. Good morning, Ashraf. Now, in your latest note, you say the U.S. dollar is a bit oversold but not undervalued. How much more downside is there for the dollar then?
Well, like John said in his intro, the dollar is actually around 9% above the lows that we saw last year, whether in the dollar traded weighted index or against the euro. The euro was at 160, now it's around 147. So the dollar is really off its lows. The big problem that is making the news is that the pace of the decline over the past few months has actually outpaced or exceeded the rally in the dollar we saw last year. And this loss has really been, this loss of value has been really a result out of the increased liquidity out there. When equities go up, there is so much liquidity. And because the word liquidity is usually denominated in US dollars, the cash that is used is being gone to other currencies. That's one thing. The other thing is that there is, even though the Federal Reserve can talk and can hint and can indicate about higher interest rates or reduced liquidity, the currency market knows that the Federal Reserve cannot put its money where its mouth is. And it can only give us the obvious and says we're going to raise interest rates when the time is right. At the same time, the U.S. Treasury is issuing a new record of bonds every month, while you have other nations who are raising interest rates. So really, the path of least resistance right now is to sell the dollar when risk is either neutral or up.
Okay, so definitely a concern about velocity there. Now, the dollar did rally last week on Bernanke's comments, and it is higher again today. How would you interpret this rebound? Is there anything to it?
Yes, well, there is. There may be hints that the policymakers are going to collaborate and to intervene in a verbal manner. We are also seeing, this is very interesting. What is happening to the dollar is really mainly a dollar story and not a strength in the euro or strength in the sterling, the only currency that is actually falling against the US dollar. But really looking deeper into things, the only fundamental thing right now that can really lift the dollar and give it a sustainable bounce is the good thing, which is maybe for U.S. growth to improve and to have a consumer-led recovery, or the Fed to be able to reduce liquidity. That's really not likely to happen. The other thing, Scarlet, is if we're going to see a retreat or a deeper retreat in equity markets. Unfortunately, short of that, nothing's going to happen. But one last thing, the euro is really rallying also because, or actually it's not really falling, it's because of the weakness in the US dollar. 25% of the currency pairs traded in the currency market is accounted by the euro-dollar exchange rate.
Thank you so much. We thank you for your thoughts. Ashraf Laidi of CMC Markets in London.